Hello guys, let's move on to some of the examples now. And this is where the magic actually happens. So we will see how efficient the Renkos play in our evaluations and with indicators as well. So here's our Euro USD chart with the 20 pips brick size or the 200 pips brick size. And immediately we can see this is the downtrend, lower lows and lower highs. And this area is the upper trend. So let's just find out some of the how you can use them with support and resistances. So this is the area you can see, or rather you can say from this, we can start from here. The price moved down with a little bit hiccups. It moved up a bit, but it moved down a little bit resistance. Then it moved at this point. Whatever the reason behind was that we will see afterwards, but it moved immediately right up. So this was a huge area where an abrupt price change was seen. So this is the major area where you can see, or you can say in future, the price will hit and move, do some kind of reaction. So this is area we would have marked as well. And right, you can see when the price hit down, it started a range over here. So here you can see for a couple of time period, it moved within 400 price or 40 pips range area, right? And when it break out from this area, either it would have broken down, breakdown, or on the upside. So when it broke upside, it moved back in the range, and you can see this was the range area. The upside you can say at this area, and this was the lower end. So this whole area was a support area when it broke up. So we can see when it hit back, and this was the first reaction. This was the first retest after the breakout, and immediately you can see it moved quite high. And it moved around from the from the upper area till the high around 1366 or 1350 points. So this is the this is how you can check where the resistance or the support area can work. And then again you can see it came back down here again in this range, and again gave a reaction. And this time a smaller reaction, and we can see that in the first reaction the price moved a bit more higher, but in the second reaction it moved a little bit lower. So we can see the momentum is being shifted. The momentum is losing its power. It's losing its trend. So we can say in the third reaction or the fourth reaction, it is likely to break down. So here is what exactly happened. It went down, broke down, and moved back up almost to the same region, almost to the same area. And we can just loosen this up a bit. So almost to the same region, and immediately pulled back down. So this support that was initially the support broke out and then became a resistance. See, it went back up, nearly touched it, and then went down. It didn't came back up to this area. But when it does come to this area, watch what happens. This area, we have already marked this area. It went up and a reaction was taken. So you could have short sold over here and make good profit, right? Then it moved back up a little bit, SL hunting. It moves back right through it. Then again, it went quite down as well, right? So this is how you can use support and resistance. So another example, let's move on to another example, right? So this is an area, this area you can see the price moved down, then it moved up, and then an abrupt 3 to 4 candles down, 3 to 4 breaks. This is a major reaction area. So you can say when the price will come back to this area, and you can also make a range over here. Yes, you can see this is the range, You can also include these areas, because this was also a reactionary area, and then a little bit or more reaction. And you can see the first reaction had 3 or more bricks, 3 bricks higher, and the second reaction had only 1.5 brick higher. So the momentum was losing. We can see the first reaction was good, but the second reaction momentum was losing, and on the third reaction or the fourth reaction it might have broken. So this support area, this area you can see now becomes resistance, right? So it came back in and then it moved down, right? Now when it came back to this area, this range area, you can see there was a slight reaction. There was a reaction, right? You can see there was a reaction. This brick moved up, and we can see this was a reaction. A very small reaction though, but it still moved around 300 points down, right? But the momentum, initial momentum was very tough, as you can see. The momentum was tough. It moved higher. So this resistance area broke up and now became a support. And when it moved down, here you can see there was a huge movement, right? This was a huge movement. And this was the area. The first reaction is always the best reaction. Always the profit area where you can make good amount of profit. This is the range. This is the moment that you make profit, right? Then it came back again, had a little bit of stop loss hunting, but the major players, the market movers, and again up. Then it became, you can see the reaction. The first reaction was big enough that it moved really, really high. Then a bit of hiccups, then moved in the same range, moved a bit higher, but not that much. So the reaction was less. It came down, back down, and you can see again, it came back down to this area, right? And moved back again to this area. Again, this range, right? This, you can see this wick, and then it moved back down. So you can make another short sell call here as well, right? Another example. Okay, let's see this one. Let's see this one. So this is the area. You can see the reaction over here, the top side, and let's move on to the bottom side. Okay. Now, initially, this was the area where might we have seen that this area, this was the range, this was the initial candles that we should be looking at. The reaction was good enough. Then it moved back here again, a little reaction again, because the sellers or the buyers, the big players were seeing that initially there was a big reaction at this point. This is where you can have taken a mild scalping position, and it moved back up around maybe 500 points. Yes, around 600 points. So 600 points, almost a confirmed profit, and then it moved back down. It broke that support, moved down, and then came back in the same area, as you can see, this same area, and then moved back down on the first reaction, right? The first reaction, it was tough. Then it moved back up in the same area, and then it came back down. See, you can you could have made profit from here, or you can have made profit from here as well. So it moved back down, right? Then again it moved back up, a little reaction, then moved back up again, and this is the fourth reaction, a little bit more reaction, but then there might be a news or something, we can't say, but Renkos do not cover news. So this is where again it moved back up, broke it, then it moved back down. You can see a little bit reaction again, right? So it has been taken 4 times. This was the first reaction, the second reaction, the third reaction, fourth reaction, and then it broke up, right? Then it had a little bit response again at the support. Then it came back down. It came back down and broke it through. Why? Because new range was developed over here, right? New range was developed. So we need to make shifts of these ranges, and we can see this was a huge range. Range over here, we can start from here and we can move this one over here as well. So this was a huge area. It could have taken support from any of this area, and look at this move now. It went back down to this area and all the way up, all the way to this week. See, that is how you play with Renkos and the support and resistance. And we can have another look. Let's make the video a little bit shorter. Already 10 minutes have gone by. Let's look at another example.